Hi, I'm Nicholas Babaya from the Centre for Risk Analysis. The South African government's debt has been gradually growing over the past 10 years, but this has been greatly exacerbated due to the recent COVID crisis. In this clip, economist Russell Lamberti from ETM Macro Advisors shows some of the South African government's recent trends in revenue, spending, and debt. Take a look.
All right, so let me take this to a close by looking at my final two paradoxes. The second paradox is that easy budget funding, which is flooding towards South Africa from foreign investors, local funds have a lot of money that they can put with the bond markets. Yields are fairly attractive, even though our government is misbehaving. We're getting this easy funding, but I think it's the easy funding that's actually breaking South Africa. It's aiding and abetting a horrendous borrowing habit by a corrupt and inefficient government. And so this just sustains the deepening of a structural long-term problem. It would be far more beneficial in my mind if South Africa was able to get better disciplined by the foreign capital markets. But alas, with such easy monetary policies overseas and with such financial and monetary misbehavior, if you like, overseas, it gives South Africa a free pass, and it gives the ANC a free pass to continue to run these very, very irresponsible deficits. So you can get a look at what this is like in this chart over here. What you're looking at is just the pure revenue and expenditure numbers of central government. So the blue is expenditure, the red is revenue. You can see those lines were pretty much congruent on top of one another around that 2003-4 period to 2008. That was the Trevor Manuel period. That was the great commodity boom. That was the general restraint of government spending. And then the global financial crisis hit, and these two charts diverged, and they've never met again. And so you can see how they follow this trend from 2009. Those are the dotted red and blue lines there. Spending did continue to increase under a COVID world, not that aggressively, but really just continued on trend. And really that's the kind of forecast of the next few years. Expenditure, should I say, did that. Revenue declined very, very substantially, of course, through the course of COVID, and that's the rebound in revenue. Now, so we can see how these two lines continue to diverge in very, very dangerous ways. And of course, this is the slow, painful march to the fiscal cliff. Now, if we look forward onto those two trends, that's what this would look like. If you just stay on trend for expenditure and for revenue, you're going to be running over the course of the next few years, very, very large deficits. You're going to be running 400 billion rand a year deficits or thereabouts. These are enormous additions to the national debt that will weigh down South Africa and continue to put South Africa into a pretty untenable position. It's possible as well that the revenue trends look more like that, and then you're in even deeper trouble unless you can somehow curtail spending and actually flatten spending out. But for now, it seems very unlikely. So, of course, what that means, and I'm nearly done, what that means is this. So this chart is the net of the two charts I've just shown you. It's the actual difference between those two things, which is the deficit and the surplus. So we're running roughly balanced budgets. We go into the financial crisis. National Treasury says this will be temporary. Those were their exact words. And of course, it wasn't, was it? We stayed there for a decade. And then we started to deteriorate pre-COVID. We started to deteriorate quite badly, ran this big deficit in COVID. We've got a bit of a tax recovery, and so this has come back. But really what's being projected over the next 4 years or so is something like this: a recovery back to that old 2009 to 2018 mean, which, if government can get that right, would probably be quite impressive, and the bond markets over the next few years, given the macro backdrop, would take to that very favorably. Of course, one's got to reckon with the fact that this was already deteriorating heading into COVID, and on a fairly sustained basis. The deterioration was not seeming to level out. So that pre-COVID trend, one could argue, is really the trend we're on. And the COVID dip was just a kind of extreme left field thing that happened in an otherwise already poor trend. Given the macro backdrop, though, which is something that didn't really exist in the previous 10 years, and now those macro tailwinds, those commodity prices, that weaker dollar, starting to benefit South Africa a little bit more. Maybe I'll be an economist fence sitter and say maybe the final result of all that is something in the middle. But if it is, we're still adding close on R250 billion of debt to the burden every year. And that's just not a sustainable place to be. And I think that's probably the big take home from this budget, is just an incredibly disappointing budget again, because we're not seeing the urgency, because it's just so easy. These deficits are so easily funded in this world of monetary madness.
Thanks for watching this video. If you enjoy our content, please give this video a like, subscribe to our YouTube channel, and for more content like this, follow the link in the description to gain access to our 30-day free trial.